Welcome back, everyone. Today we are diving deep into Applied Digital, also known as APLD, a stock that has rapidly evolved into one of the most talked about players in the AI infrastructure space, becoming something of a heartbeat for investors who are closely watching the expansion of artificial intelligence at the physical and data center level. As of late March 2026, the stock has demonstrated notable volatility, reflecting both broader market uncertainty and the intense speculation surrounding its future growth potential. Over the last 24 hours, we have observed a localized attempt at an uptrend, with the price fluctuating in the range of approximately $26.50 to $27, indicating that buyers are stepping in at key levels despite the overall cautious sentiment in the market. This content is created for informational and educational purposes only and should not be considered financial, investment, or trading advice. The views and opinions expressed are based on publicly available information and personal analysis at the time of creation and may change without notice. Investing in stocks, especially high-growth and volatile assets like APLD, involves significant risk, including the potential loss of principal. Always conduct your own research, evaluate your financial situation, and consult with a qualified financial advisor before making any investment decisions. The creator of this content is not responsible for any financial losses or decisions made based on this information. Past performance is not indicative of future results. While the broader financial environment remains shaky due to macroeconomic pressures, ongoing concerns about interest rates, and general uncertainty in global markets, APLD appears to be holding a crucial support level that could determine its next major move. There is a visible buy-the-dip mentality forming among investors who are positioning themselves ahead of the company's upcoming fiscal Q3 2026 earnings call scheduled for April 8th, 2026, which is expected to serve as a major catalyst for price direction. In the most recent 24-hour trading window, the stock has shown a modest recovery of around 0.85% in after-hours trading, suggesting that bullish participants are still active and not ready to surrender control just yet. From a technical perspective, the stock is currently testing its 100-day simple moving average near the $26.60 level, which many traders consider a critical make-or-break zone. Maintaining a position above this threshold would help preserve the longer-term bullish structure, while a breakdown below it could invite further downside pressure. The Relative Strength Index, or RSI, is currently hovering between 45 and 48, placing it firmly in neutral territory, meaning the stock is neither overbought nor oversold, and therefore still has ample room to move in either direction depending on incoming catalysts. This neutrality also implies that there is sufficient fuel for a potential rally if positive developments emerge, particularly from earnings or strategic announcements. On shorter timeframes, especially the hourly charts, analysts are observing the possibility of a bullish crossover forming, which could signal short-term upward momentum. However, the daily chart still reflects a more cautious outlook, indicating that confirmation is needed before declaring a sustained trend reversal. Recently, the stock faced rejection near the 2850 resistance level, highlighting a strong supply zone where sellers have been active, and for a true breakout scenario to materialize, the stock would need to achieve a daily close above 29.40 cents, accompanied by strong trading volume to validate the move. On the downside, the $24.80 level is widely regarded as the line in the sand, serving as a key support area that must hold to prevent a deeper correction and maintain investor confidence. Moving beyond technicals and into fundamentals, many investors are asking why this company commands a valuation exceeding $7 billion despite reporting net losses. And the answer lies in its transformation from a traditional crypto mining operation into what can now be described as an AI superfactory. Applied Digital is no longer simply hosting cryptocurrency mining operations. It is actively building and operating large-scale, high-performance data centers designed specifically to meet the growing demands of artificial intelligence workloads. In its most recent financial report, the company posted an extraordinary revenue increase of approximately 250% year over year, reaching $126.6 million, which underscores the accelerating demand for its infrastructure and services. One of the most significant developments is the progress of Polaris Forge 1, a flagship project that has now reached ready-for-service status and is delivering 100 megawatts of capacity to customers such as CoreWeave, a key player in the AI compute ecosystem. Even more ambitious is the financing and development of Polaris Forge 2, supported by a recently announced $2.15 billion senior secured notes offering, which will enable the company to scale its infrastructure footprint even further and solidify its position in the AI data center market. Additionally, Applied Digital has secured a long-term 15-year lease agreement with an investment-grade hyperscaler, widely rumored to be a major technology giant, which is expected to generate approximately $5 billion in revenue over the duration of the contract, representing a massive and stable income stream that significantly strengthens the company's long-term outlook. By shifting its business model from lower-margin crypto hosting to higher-margin AI cloud services, the company is effectively positioning itself as a landlord of the AI era, providing the critical infrastructure upon which next-generation technologies will be built. The market is also buzzing with speculation and excitement surrounding a proposed business combination with Ixo that aims to launch Chronoscale, a GPU-optimized platform specifically designed to handle advanced AI workloads. And this move is widely seen as a potential value unlock that could further differentiate Applied Digital from its competitors. Recent regulatory filings shared across social media platforms indicate that major institutional players, including firms like VanEck, have been increasing their exposure to digital infrastructure assets such as APLD, signaling growing confidence from sophisticated investors. Furthermore, the introduction of a 2x short APLD ETF earlier this year has added another layer of complexity to the trading dynamics, as it creates conditions where any positive news or unexpected upside catalyst could trigger a significant short squeeze, forcing bearish traders to cover their positions and potentially accelerating upward price movement. Applied Digital represents a high-risk, high-reward opportunity tied to the physical infrastructure layer of artificial intelligence, a sector that is still in the early stages of development but rapidly expanding. While current technical indicators suggest a period of consolidation and indecision in the short term, the underlying fundamentals, particularly the multi-billion-dollar data center projects and long-term contracts, point toward a company that may be just beginning its growth trajectory. The stock currently holds a consensus buy rating among analysts, with some price targets reaching as high as $48, although these projections depend heavily on the company's ability to execute on its ambitious plans. Investors should pay close attention to the upcoming April 8th earnings report, as it will serve as a critical test of management's execution and could either validate the bullish narrative or raise new concerns. From a trading perspective, monitoring the $26.60 support level is essential, as holding above this zone could present a potential entry point for swing traders, while a significant increase in trading volume, particularly above 20 million shares, would help confirm a meaningful shift in trend. At the same time, it is important to recognize that this is a highly volatile growth stock, and proper risk management, including the use of stop-loss orders, is crucial to protect capital. Ultimately, the key question remains whether Applied Digital is currently overvalued at these levels, or if the massive hyperscaler deal and continued expansion into AI infrastructure are only the beginning of a much larger growth story. What do you think about APLD at this stage? Is it already priced for perfection, or does it still have significant upside potential? Share your thoughts in the comments below. Make sure to hit the like button, and don't forget to subscribe for more in-depth technical analysis and market insights.